run through today. Now, it all comes down to kind of your specific situation, and it's not a substitute for tailored advice, but we're going to get an opportunity to do that at the end as well, if you do want to talk about some specific questions that you might have. So just to briefly run through the agenda, like Akita said, if you have any questions or notes you want to take, please do that. I encourage you to drop that down in the chat box if you have any questions. And yeah, if you have any issues or tech issues, just let us know as well. In today's session, we're going to take a look at a tool which will help us demonstrate the impact of some what-if scenarios on our profit and cash flow. Now, the title is a little bit doom and gloom, but it is the reality of what we are going through right now, which is some tougher economic times. So we'll cover some strategies to help us increase our sales and also look at lowering cost of sales to reduce the amount of cash flowing out of your business. We'll also look at some strategies on how to better manage your cash flow and monitor some key performance indicators or KPIs as well. And obviously, at the end, if you are keen to explore this even further, you can get in touch with us. But the theme of today is, we're going through a bit of a tough time. And this is some data that Xero publishes every month. And it's essentially like the Xero Small Business Insights report that published that over 90% of businesses in NZ and AU, and even the UK, experience at least 1 month of negative cash flow each year. And if you're a business owner, you might say, hey, I've had a couple of months too, right? And maybe recently, and especially during COVID. And that's not abnormal, but it is quite crucial because it means that we're spending more than what we are receiving in that month as well. So this can lead to about 50% of businesses surviving only beyond 5 years. So most of them fail before that 5 years because they run out of cash to play the game. So it is critical to manage our cash flow. And even sadder is that some of these businesses actually have quite strong profits, but they just didn't have enough funding to keep turning the wheel to essentially extract that profit for themselves or their family or future growth of the business. So although profit might be an important thing, creating profit is obviously really important. It's how you manage the business performance, but making sure that you have enough cash to sustain the business for the longer term is crucial, because you can have profitable months, but if you run out of cash, you can't play the game anymore. So it is a bit of a sad statistic, but we're not here to kind of wallow about that. Well, we all know what it's like to be in business. It is tough. And there is a saying, running a business is like a walk in the park. If the park was Jurassic Park, right? You're always looking out for different things that might get you. So let's kind of face some realities here. What are some things that could affect your business in a tougher economy, right? So some high level dot points there, especially within your industry here. We all know that when there's tough economic times and there's pressure on families to control their income and spending, it is harder for customers to spend on either discretionary or luxury items. It's also harder for them to borrow money to spend on pools, for instance, because they have to allocate some of that income for, call it non-discretionary expenses, things like the biggest one will be your mortgage, right? And we know interest rates have gone up. A larger proportion of your salary or your income for that family will be going towards that. So as their budget tightens, it can affect your business, of course, because that will lead to less customers and less inquiries that come through as well. So that reprioritizing might also mean that it's harder to convert some leads, right? So even though you might have some inquiries, converting them might take longer than usual because they have to chat a bit more with their partners or look at their budget a bit more and really kind of pick and choose what they have. And it's a lead-on effect on top of that is their transaction value also might be a bit lower. Whereas in the past, they might be selecting, select all, buy all the whiz-bang gadgets along the way as well. But in this case, they might just be picking the core products itself just to kind of minimize their spend. So again, all these lead-on effects that can happen in the business. Now, we know that inflation has also squeezed margins as well, especially if you haven't adjusted prices in the last 12 months or 24 months, you'll be feeling the pressure on your margins as well. As especially if your suppliers have increased prices. Now, that can be direct suppliers, whether that's materials and inventory, or it could be overhead expenses, things like rent or things like bookkeeping, accounting, or your admin expenses as well. So these are things that will squeeze not only the gross profit margin, which is the top level margin, it can squeeze the net profit margin as well. Now, lastly, we know that staff retention is something that has been challenging in Australia. I know in particular in the professional services industry, accounting, law, consulting, it's pretty tough. And even in allied health services, I know it's been really tough to find people. And what we're finding is this has been not just in those industries, it's actually across the board as well. If you've experienced staff leaving for, call it, better pay somewhere else, again, this pressure of inflation is requiring people to go and find better pay to support their lifestyle, to make sure that it doesn't go backwards. Now, pair that with not having enough skilled labor coming into Australia or graduating through the doors of university or even TAFE, we're finding this squeeze that to retain staff, we have to increase their salary, or we have to compete with other businesses to retain our staff. Again, another headache, another pressure that we have during this time. So what does that mean, right? It's obviously it's a scary talk, but it's important for us to anticipate how your business might be affected and have a solid plan to weather the storm. Now, what we'll do today is we're going to use our calculator to put a bit of numbers to this potential impact. I'm going to run you through a what if scenario and look at how some small changes it can really impact our business and really make a big difference in our profit and cash flow as well. So it's not all doom and gloom. It's just about planning, really having that understanding of, okay, where are those possible pitfalls? My clients or my customers are not going to return to me more often, or it's not going to have a higher transaction value, and really kind of taking notes on where some of those impacts might be in your business. So as I go through some of the strategies after this, I'd love for you to take notes where it resonates with you the most. There's going to be a few strategies. Doesn't mean you implement all of them. The idea of today is the power of small changes, right? So I'll show you that through that calculator I've been talking about as well. So what can we do? What can we do to make sure that we are helping, battle this tougher economic period? So we're going to start at the top. If you think of your profit and loss, excuse me. If we think of your profit and loss, we start at the top first from a sales perspective. Now, there's some key drivers we need to understand. So what can we do to protect our business and achieve this increase in profit and cash flow? Your starting point should always be your existing customers. So if it's easier and cheaper to sell to an existing customer that you already have a strong relationship with. So you need to really delight your customers, get those customers to come back and give you good Google reviews and encourage them to build a strong relationship with you. What that means is you need to engage with your customers. So whether that's through, like what we're doing through a webinar or providing some knowledge through newsletters, at some point you need to keep in touch with your customers to not only know what they want, but more importantly, to keep that relationship strong. So that increases your retention rate of those customers. So if you're in the service business, you're, for instance, servicing pools, for instance, you want to make sure that you have a constant finger on the pulse on how they're doing, right? And what are some of those challenges? So engaging your customer will be important, because one way to keep our cash flow and profit is to make sure that we don't lose as much customers as well. Because again, customers will be shopping around during these tougher economic times. So what can we do to make sure that we're keeping that customer in-house as long as possible? Now, there's a couple of things. Know your customer, know what they want, know their challenges. Obviously, ask those questions, whether that's a phone call or an email or, through one-to-many webinar presentations like this. You really understand what's the challenges during that time and understand what they want. And then straight away, what you want to do is under promise and over deliver. So we want to make sure that we try our best to over deliver what we're saying that we will do, because that delight is what we're looking for. That makes your customer a bit more sticky. Some surprises along the way that they didn't expect that delights them will always maintain that strong relationship. So there's a few examples you can think of. I've had some, for instance, we'll just share some experience we've used recruitment companies before in the past, and out of the blue they just offered us market salary survey results that they want to share with us so that we know whether or not we're on par in terms of our salary for our team members. Totally out of the blue, but that made us really sticky to that supplier because then they knew those challenges right now for us, right? What are those particular challenges that we have? Oh, we don't know whether or not our team will leave for somewhere that's a bit better or higher pay. So how do we fare, right? So those are the kind of examples of engaging your customer, getting to know them, and ways to really ask them what they want, what they need. Now, a few other things as well you can do is to reward loyalty. Obviously, if they're returning back to you, so we think about, for instance, like Qantas points or bonus points, or it's something as simple as returning customers with this little what do we call this clips on those tickets at the coffee shop. That's a loyalty program. So essentially is you're wanting your customers not only to buy more from you, buy more consistently from you to get something, and that might be an extra product or extra service that they get at the end after achieving a certain threshold of purchase from you. And again, these are people that are already engaged. They know what you do. They know how you do it. They love working with you. It shouldn't be too hard to introduce some of this stuff, right? And that's why that's where we can impact the most in terms of our sales, is starting with our existing customers as well. Yeah, we just need to be mindful. Obviously, if our competitors are reducing prices to attract customers, that we don't follow that track as well. Instead, we want to be delighting our customers in other way. Price is not necessarily the best strategy. I'll take you through an example later down the track. Now, the next strategy that we have is obviously we've got retain existing customers. We want to make sure that we increase our leads as well. Now, during a tougher time, so to speak, increasing leads can be challenging, but it doesn't mean that you can't outperform what you've done in the past as well. Now, this is pretty general, but there's some things that if you're not doing already, you can start thinking of doing, but it's more important than ever to build a strong online presence. Now, in this digital world, your shop front is not necessarily the first place that people see. It will actually be your website. The power of Google is actually quite amazing. So search engine optimization, SEO, to make sure that you're the first that comes up in your local area or in your specific niche or your expertise. You want to make sure that you are doing some sort of work to put yourself as a first search result as best as possible. It can cost a bit of money, but we'll talk about how we can offset some of that later. But if you don't have that expertise, there's a lot of digital ad agencies that can help with that. So strong online presence, and also, again, engaging with your new customers or prospective customers, whether that's through newsletters or other social pipes that you can post about your products or your service, or even, like what we're doing right now, running webinars so that they are aware of who you are and they can think of you when there's an issue that they need to solve. So getting in front of them. The next one is implementing a referral program. This is so underrated. It's kind of like what Ben shared at the start. We only work with referrals. So we've had first-hand experience in doing this ourselves. And what we find is that customers that love us will have other people that will also love us. So if they have clients, they have a pool, most likely they'll know other people that has pools as well that need a little bit of help, or people who want to get a new pool installed in their home. So it's not hard to bridge that gap by just introducing a bit of a referral program. Hey, if you introduce us to so-and-so, we'll roll out the red carpet and it will give them a bit of a help to make sure that they can get the best product and service. And you can even print out or get a piece of document ready for them to hand to the potential referral. And there's other situations where you can even give referral fees as well. Now, referrals doesn't necessarily need to be customer to customer. You can have referral partners as well. So if you think about your environment right now, who are the people that you're working with? If you have builders, you have contractors, you have suppliers, and those people are facing your customers, it's overlapping, it's just that they're servicing different parts of that. Think about having referral programs with them as well. So you can have a quid pro quo situation where you have a referral agreement. So that will help increase these. What I like about that the most is it's usually the cheapest way to get more leads, and also the leads are a lot better It's sometimes even better than the online SEO leads that we talked about before, because it's based on word of mouth, and that's really powerful, especially in an industry where you can make a big mistake and cost a lot of money. You want to make sure that it's from a trusted source, right? Other things that you can do is obviously attend some networking events, deliver educational marketing material. The idea that it's free for them to consume, to understand you, understand your brand, understand what you do a bit better as well. Last point about building community and presence. That's a really strong one. That's usually really also once you have a really strong referral program, what you can start doing is building a community of your own and start talking about some of the time. It doesn't have to be necessarily about product. It's combining all those people in one place and then sharing some updates from time to time. But most of the time, it's just encouraging a community of either pool owners or people who are trying to renovate, any sort of kind of community that you can create where they can help each other, because the stronger that community is, you being involved in that community makes you the expert in that area. So people will come to you more often, and it's a great source of leads as well. A really strong sense of community. I've seen some really good ones where they end up with their own language and lingo in their community. I feel that's really powerful. It means that there's inside jokes and ways that they talk within that community. I've seen that in business communities. I've seen that in even some in accounting communities that we've seen. They just have their own language and their own people. And it creates this sense of belonging as well. Really powerful, where you can also test new products and pitch new ideas as well, or get new ideas from them. So increasing leads, increasing retention, increasing leads, and obviously next one is turning leads into customers. Now, when we look at that as an objective, it's about conversion, right? Again, conversion is it's a series of conversations that you have, or maybe one conversation that you have with that lead to provide value and to essentially make them say yes to the value that you're providing. So it's important to have a sales process and have your sales team trained on that. It needs to be beyond you if possible. If it's you on the phone, then try to train other people to do that, because then you'll have 2 or 3 pistons firing at the same time, trying to get those sales through the door. And a customer should have received the same awesome experience no matter who they deal with. So you got to make sure that if they're dealing with you, if they're dealing with a team member, it's like dealing with the owner at the same time. So it's not just about the process, it's how those people are being treated as well, because that makes a big difference in whether or not your sales team is going to be successful in converting that sales. It needs to be as if you are the owner of the business and you care as much as the owners of the business as well. And you want to make sure that it's made easy for people to buy from you. So if you have only one payment method, for instance, think about other payment methods, payment terms. I've seen people use things like ZipPay and things like that to help with our customers. It's reducing the barrier for people to essentially go and buy from you. And what you want to do as well along the way is, because it's a series of transactions that's actually happening from a lead to a conversion. It's the initial conversations, producing the value, showing what you do, and then getting them to sign on the dotted line. Along the way, you want to pepper them as well with some testimonials. Now, these are powerful testimonials that you can get. Again, if you have a community, powerful, right? You can get some testimonials from there. Or if you have some customers that you love working with, that's one way that you can engage with them, getting them to do some sort of Google review or even just your own review, and pepper that throughout your sales process. Because what you want to do is you're trying to lead these customers into not thinking, but believing the fact that you're going to provide great value, you're going to do a great job, and they're comfortable along the way as well. So you pepper that through your sales process, you'll find that turning leads into customers becomes slightly bit easier as well. And you'll find that the customers, it's also to you win twice. The customers that you are engaging are the customers that you like as well, that will give you good reviews. Those are the customers that you can also increase your retention with as well. Next thing is I want you to also think about how easy is it customers to access your business as well. Is it online? Is it on site only? Is it clearly signposted somewhere? We want to make sure that all the barrier to get to the point that they get to the front of your sales team is as little as possible. It shouldn't take 3 or 4 steps. It should be one quick step. Now, a quick phone call is usually the simplest way, book a call with us and we'll call you and have that conversation straight away rather than too many steps that can deter people away. Because again, this in the tougher economic times, minds can change pretty quickly. So we want to shorten the opportunity for that to happen as well. Cool. You can think of a lot more, obviously, but we're going to keep powering through because the next thing that can happen after the sale has been achieved, you can increase the transaction value as well. Now, obviously, at the starting point, if you haven't done this in the last 12 months, it's imperative that you do review your prices. Just by the fact that everything else has increased in price, your supplies would have increased in price, your, like told you, wages and things like that. If you're not moving your prices, it means you're bearing the brunt of it. So you're the one that's paying for all of this. So what you want to make sure is that your customer shares a little bit of that as well. Now, there's some training sometimes that's required around increasing prices because I know how challenging that can be, especially with those customers that you love that's been working for a while. You don't want to lose that, right? It's the opposite of what you're trying to do. But you'll find that customers that love you will stick with you because they know what you're doing and they love what you're doing. But also, you'll find that the perception of an increased price and loss of customers is usually bigger than the reality. And we actually have some data ourselves that we've gone through, and we didn't lose as many customers as we expected. But even if we did, we did have plans to mitigate what would happen if we did lose those customers. But increasing prices is so important in an inflationary period so that you are not the one that's footing the bill for everyone. Next one is you want to make sure that you avoid discounting as much as possible. Discounting actually is bad for you because it's actually better to keep the same rate, lose some customers instead. And I'll show you the calculations in a second. And if you're already in front of a customer and we're already providing value, how can you link that value to some ancillary products that you have or some ancillary services as well? So packaging them together will be important. So if you're selling a core product, for instance, the pool install, how can we level them up to get a better outcome for them, but also packaging some of those other products together? So is that an upgraded level of pump or heating, or is that upgraded level of the landscaping around where you can work together with other suppliers as well? How can you package that better so that they get a holistic outcome that they might not know that they really want, and it might actually save them some costs along the way as well, or later down the track. So presenting the best option to them is usually, or the best outcome for them is usually the best way, then working backwards rather than starting at the base trying to build up. You're fighting against the current a little bit. So you'll be surprised when you package things together. What this does is increase the transaction value through that conversation only. It's not you don't have to represent your value again. You don't have to represent having another sales conversation. It's that whole, do you want fries with that conversation that you see at McDonald's, right? It's a very simple question, but I'll tell you, it's worth billions of dollars, that question, around the world, because most people say yes, right? So consider that if we're only selling the core product, what are the other things that I can present at the front end, not later, not as an option, but as kind of the first option first. I mentioned before, offering better payment options. It's critical, especially where you're trying to work with customers where they have a more stringent cash flow now. You want to make sure that you have some sort of payment options. Now, that can be you yourself, but I don't recommend that because if you're stretching your payment terms, you're essentially becoming a bank for your customers. And the problem with that is if you're experiencing or going to experience some cash flow issues yourself, you don't want to be a bank as well because you're not flush with cash. So there are other options like I mentioned, there's the buy now pay later options. Again, this is up to them whether they take it. You don't have to push it, just putting the option in there. But there's also other financing companies that will finance their full purchase from you, where you get paid up front, but then they take over that debt essentially to then collect from there. So consider that. Now, if you do have a bit of a leeway in your balance sheet, you can look at splitting up your payment terms a little bit. Again, not highly recommended if it's a bit stretched right now. That's packaging up. So I kind of talked about that as well. So we'll keep moving on. Sorry. still leaves the transaction value. There you go, lower cost of sale. Okay, we're moving down the profit and loss right now. So we're in the cost of sales section. So if you think about the cost of sale, this is any expenses that is incurred directly in producing your product or service itself. So what you want to do is try to get any low-hanging fruit stuff like early payment discounts, volume discounts, loyalty discount, and minimizing your freight by planning your jobs a bit better, and obviously reducing rework or wastage. Now, stock control, it's more about cash flow, and I'll go through that separately. But the idea there is you want to make sure that you only have, with stock, you only have enough for you to, you don't want to hold as old stock that might be obsolete. You don't want to be holding too much stock when you're on your shelves. What you want to make sure is that it's as required, almost like a restaurant. They don't pre-package all their meals and then no one orders, you have to throw it away. They're, doing it by order. That's kind of analogy I can share there. But I do this, if you haven't explored all of this, you'd be surprised how small changes. You might say, it's a 5% discount. It's not that big of a deal. It's easier for me to order, one by one rather than in bulk. I'll show you what the power of 5% changes will do in a second in the calculator. But I want you to think of some of this different ways that you can engage with your suppliers to see whether you can get some of those discounts. Now, usually it's the bigger suppliers that can afford some of this volume or loyalty discount or early payment discounts. If you have credit terms with them, 30 days, 60 days, what can you do if I was to pay a little bit earlier, or do I get any discounts on that? Or if I buy in bulk, right? So consider all of that to lower your cost of sales. Now, sorry, just keep backwards. Now, this is the table that I was talking about with the dangers of discounting. It's really tempting. Right now, it's almost like the worst time because everyone's increasing their prices. You shouldn't be the one that's discounting. Now, to offer discounts is to increase sales when they've been dropping, right? So it's really tempting to do that. But however, often you can be more profitable by holding your price and accepting the reduction in sales volume instead. Then you'll be you'll be better off than discounting the product itself. For example, let's say you've been selling 10,000 units at $100 each with a cost of $60 each. You can see the total here is a mil minus the 600. Your GP is at 400,000. Now, alternatively, if you accept a drop in sales instead, right? So you can see here where the drop in sale goes from 10,000 to 9,000, but we're keeping the unit price itself. That's a $900,000 revenue. Basically, your cost of sale also moves along with that. You've got a 360 gross profit itself. So it's actually better than the decrease in selling price. So you can see here the quantity stays the same, but the price drops. But you can see your cost of sale doesn't actually change because your suppliers are not going to follow you. In this situation, it's following because of your quantity, right? You can see that your sales at 900 grand, your cost of sale is still consistent at 600, just as before. Your GP is at 300 grand. So you're 60 grand worse off by discounting 10% versus a decrease in volume of 10% itself. So that's just a very simplistic way of showing that. But you can see that discounting can really hurt your business. So we need to be a bit mindful when we decide to do that. So yeah, cool. Now, we've talked about the sales, the cost of sale. Now we're going to talk about cash flow management a little bit. When we talk about cash flow management, I'm just going to switch over to this slide for a second and come back. There's two examples I'm going to go through, which is the service provider example and the retailer example. Now, in the situation of a service provider example, what we're trying to determine is what's your cash conversion cycle. When we talk about cash flow management, the idea is to have more cash in our pocket. Cash doesn't necessarily mean profit, by the way. Profit is the performance of your business, how much you make minus how much you spend, that's your profit. But not necessarily all of that becomes cash, because some of that profit you might have to pay debts off, or some of that profit you might have to take out as drawings and things like that. But here's an example that will explain that a little bit better. Now, what we're trying to do is minimize our cash conversion cycle. So on day 0, the client signs a proposal and the work starts. Okay, we begin working on day 0. So that's what we call work in progress. So it takes 35 days for us to complete the work. Now, during that time, we are servicing or we're providing products, and we're not getting paid yet. So we have to pay for the services, the contractors, the employees, the electricity, the rent during that 35 days. So we have some cash coming out during that time. Okay, so what happens in day 25 is work is completed. And then what we do then is at day 35, we invoice the client itself. Now that's your receivable days. Now, not only you've just spent all this money, you got to wait another 75 days. Unfortunately, this is a long time. It's really bad for you to get paid. Then you receive payment, and that's cash in. Now, during this time here, your balance sheet has taken a nosedive because you're funding that project during that time. Then only you're getting reimbursed plus the profit margin on top. So your cash conversion cycle is at 35 days plus 75, it's 110 days. So that's that's a bit more than 3 months for you to get paid from the day that your client signs a proposal. What that means is you have to have 110 days worth of cash running the business before you get paid. So cash flow management, it's not about, there's nothing to do with profit here. You see, the price is still the same. You're getting paid the same price. The cost is still the same in between. It's about when you collect the cash. Now, in example of a retailer, it's about stock holding. You buy stock from a supplier, and then you pay after 35 days, you pay for the stock, so you cash out. But then you're still holding the stock on the shelf. This is, sorry, I'm going back. This is your credit turn time, essentially. So how long you need to, how long do you have before you sell that product? Sorry, you have to pay for the product. And then you still have some time where you're holding the stock, cash stock on the shelf, before the customer buys. So it's a little bit more different example, but it's stock holding rather than work in progress. You can see that 65 days of average stock holding, and then you can see there's 35 days where you didn't have to pay for it. That's why it's a minus. So it's actually a 30-day turnaround time between the time that you have paid your cash and the time that your customer actually paid you. But even then, you can see that you're holding your stock a bit longer. That's what I was meaning before. If we can manage that a little bit better and shorten this period here, that cash conversion cycle becomes zero. I have a few examples where clients actually have their stock days actually lined up to the day of delivery and payment as well, which is perfect because you're not funding any of that cost of sale. The cash coming in from the customers. Now, another way to think about this is if you collect deposits from customers, that's perfect because then you're collecting some upfront to service some of this cost, so you can start reinvesting some of that cash while that stock is making its way to the customer for the final payment itself. So there's this business 101 cycle that essentially explains that very quickly, just to get time. Okay. And that's what I was talking about before. Profit's great. Yep, we make profit. That's good. But profit has to turn into cash first, because that cash will mean that we can either draw that out as owners or reinvest it into the business again to create profit. And in this situation here, reinvesting means we have enough cash to pay for next month's payroll or have new team members or buy more stock, which we will sell for margin and make profit. But you can see that the gap here usually is what slows down this spin. Now, this spin here is what creates more profit, more cash to invest, more profit, more cash to invest. Idea is to speed that up. If your cash conversion cycle is 3 months plus, it means that in a year, we're looking at only 4 times the cash conversion cycle, right? It's pretty slow. Whereas if you spin that up, if it's only 20 days, you can see how much more profit can you make in a singular year. So it is a pretty powerful concept, but that's pretty high level that I've gone through there. There's some, kind of cheat sheet items here where it shows you what drains your cash, cash slow collection of debtors, increasing stock holding and work in progress. You're not completing work as quickly as possible. Got a lot of loans, a lot of tax outstanding that will slow a lot of this spin. You can't get back to the asset side to then create more profit. Profit's a pretty simple concept. People get to understand it pretty easy. Just charge more than you spend or make more than you spend. So for you to have gains, it's profit gain, sales growth, margin growth. Pretty simple for people to understand. This is where it gets tricky. So, and at the start, when I mentioned where it's really sad to see where a profitable business actually goes down because they manage their cash poorly. That's really sad. It means that there's a lot of issues here that's not allowing them to create the next level of profit again. But they are profitable. It's just that the owners are not seeing it, or they're not seeing that cash to be able to invest. So we don't want to be in that territory. So I would say if anything, and changing cash flow is more like changing habits and process. changing profit is more about your customers and what you spend. So you'll see that when we talk about managing your cash flow, it's really about internal processes and how you approach collecting cash, so or paying out cash. So we want to make sure that we have some data processes. We want to make sure that we have review our debtors, how late are they paying us. We want to make sure we're chasing them as soon as possible, or can we review collecting some deposits up front, get that money earlier. And also qualify some customers before offering credit. Not everyone is the same. You might ask some simple questions before you say, hey, you can pay me in 15 days or 30 days. I wouldn't even go to that point if you want to collect your cash more upfront, but I understand that's something that you might need to do to get that sale across the line as well. Stock control, monitor your stock. If there's a bunch of stock that you don't even know what's in your warehouse sitting over time, that's definitely a sign of missing stock control systems. You should know exactly at every point what stock you have, where is it going, when is it going out as well. And monitor your sales trends, because not all the stock will be relevant as important. If the seasons change or the type of stock has changed or there's obsolete stock, you want to make sure you're on top of that as well. Negotiate better terms with suppliers. So this is what I was talking about. You can always pay later. In that example I had before here, where you're paying for supplier for the stock before you sell. If you can flip it, you collect from the customer but pay later. That's amazing if you can do that. But that depends on your supplier's credit terms. So again, it's just a series of conversations that you need to have. Utilize and adhere to budgets and forecasts. So obviously not overspending, or understanding what's the big debt repayments that you might have, ATO debts, any external debts with banks. You want to forecast that cash flow so that you don't run out, or you don't have to tip your own money in as well. Now, the last one is actually quite underrated, but I see it as a really important point, determining a monthly drawing amount that you have. So what that means is you are one of the sources of a cash flow drain, essentially, to the business, because you have to pay for yourself. Now, do not confuse your salary that you take out from your business with the drawings that you take out. The salary is for you working in the business. If you are working as a salesperson or BDM, you need to be paying yourself a salary. That needs to be factored into that profit, cost of sales, operating expense or cost of sale figure, which will be factored into your profit. Now, if there's profit that's created after that you draw above and beyond your salary, that's something that you need to determine and understand what that amount is. If you are the biggest cash drain, it means the problem is in the on the personal side of things. You need to review where those budgetary issues are, because what it means is your business can't sustain that lifestyle, or we're spending a little bit too much at this current period in time. So it does ebb and flow as well. Doesn't mean that we drew, $2,000 a month last year. It means the same this year. You need to really be aware of that. Now, the hard thing is our personal lifestyle usually doesn't change that often, or if anything, it increases over time. I've got a young kid. I know over time it's just going to get more and more expensive, especially if we plan to have more. So you need to be you need to have a budget personally and understand what those requirements are, and have what we call your minimum drawing requirement each month. Now, if your salary covers it, doesn't mean you don't take up drawing as well. I believe in rewarding yourself as a business owner, but that's a lever that you can pull and push comes time the business goes through a bit of a cash flow crunch. But the idea is having a clear understanding of what that looks like for the 12 months, having that forecast and budgeted for your business as well. Do not treat your business bank account like a savings account or a spending account that you can use. Fix that amount each month. Cool. Awesome. I just want to check if there's any quick questions, because I'm going to move into a calculator. No, we're good. Very good. It's either I'm explaining things really well, or I'm asleep now after listening to all of that. But either way, we'll keep moving on. If there is any questions, feel free to drop that in the chat. Now, what we're going to do is we're going to look at how those strategies can improve our profit and cash flow. Now, to do that, I'm going to go through a bit of a calculator. Now, this calculator is essentially going to show you, to get my screens in the right place. It's going to show you, excuse me. Yes, yeah, this one can go to, okay. Share screen. Where is my share screen? Ooh. Go. Okay, So I'm sharing the right screen. Can everyone see this calculator here? Yep. So thanks, Rose. Cool. So this calculator is a value gap analysis, and it's the idea here is to show you the power of small changes. Okay. All the strategies that I talked about is actually here. So we look at the profit and loss. Now, this is an example of a business that unfortunately is not doing too well. Now, it's making 1.25 million revenue. It's got direct cost of 700, which leaves us 550 left. And then we've got overhead expenses of 500 grand, including salaries of the owners as well. So what's left over for the year is 50 grand in profit. Now, I don't know about you guys, but I'm not up for that, right? With the risk and the stress and all the stuff that we take on, making 50 grand a year after paying our own salaries is just not good enough. And I truly believe that business owners actually have the freedom to choose what they make through some levers that they can pull. And this value gap analysis will take us through some of those levers itself. Now, there's some other items that I've put in here, not too relevant, I'm going to take you through right now, but it's just going to give us some data for the example. They've got some debtors outstanding, they've got some work in progress or inventory sitting on the shelves, and they've got some creditors as well. What that tells us is this number. So we talked about the cash conversion cycle before, right? Remember that your cash conversion cycle has nothing to do with your sales side of things. It's your balance sheet, how quickly you collect stuff and pay stuff. So your cash conversion cycle right now, this calculator tells us right now that this business has debtors that are currently on average at 64 days. That's a long time to collect cash. It's a long time for you to be able to receive your money. Now, making it worse, their inventory or WIP, either way, depending on your service business or retailer business, is sitting at 101 days before they get paid. Again, revisit that diagram I went through before. It's a long time before they get paid. And then their payable days is actually beyond the terms, usually what our suppliers would extend, right? It's usually 30 days or 15 days. They're paying their debtors a lot slower. And they're in this cycle of, I can't collect quick enough to pay my debtors on creditors on time. So they're in this cycle of always not having enough money. This business, how it feels like to run this business is money in, money out, money in, money out, money in, money out. You don't feel flush ever. You don't have this comfort of knowing you have enough cash to, exercise some options or reinvest into the business. So the cash conversion cycle is sitting at 105 days. Now, let's see what happens if we start playing around with some of these levers. Okay, we talked about some of the strategies before in the cash flow management side of things. What happens if we reduce this down to 59 days? It's only a 6-day change. Right? It's only 6 days. That means collecting quicker, calling your customers by 6 days. It's not really crazy to do that, right? It's a phone call away from improving that. What it frees up is about 20K in cash per year. That's pretty insane. More cash in your bank account by 20K. Now, if we were to move this down by, let's say, 5 days, so we complete things a little bit quicker, and essentially actually, I'll change that to 5 to make it 5 days each. We complete things a little bit quicker. That means our processes, our delivery, our project planning, or if it's inventory, we're making sure that we're not holding stock as long as possible. So cost stock control system. We're freeing up just shy of 10K there. So this is the impact on cash, right? There's a 26K impact into that. Now, you can see on the right-hand side here, this is the cash flow impact. You haven't changed your profit at all. We haven't changed your cost structure. We haven't changed your sales structure. We've just collected more cash for us to do more for our business or to grow for ourselves. Now, let's say we play around with some of the profit levers that we have. Let's start with the sales side of things, right? So there's a few drivers, and you can see those are the strategies that we went through before. Increasing your retention rate, increasing your number of leads is marketing, and then your conversion rate, the sales team process, increasing transactions per customer, how often they return back to you, and increasing average transaction value. This is what we talked about, packaging it rather than just selling your core product itself. Now, those changes doesn't have to be huge, and this is where we can say, just power small changes creates a massive impact. So I'm really excited to show you this. For example, if we provided more support to our customers, we engage with them, we know what they want, and instead of retaining only 78%, so we lose usually about 22% of our clients, let's say we retain an extra 5%. So that's 26 more clients retained. 43. Out of the 663, what would have been retained is 706. So we're retaining a bit more because we're stickier with them. And then what we do then is, let's say we increase our leads by from 175 a year, we're increasing it by 3%. So that's just 5 new leads per year. Yeah. So I just want to show you how small these numbers are, right? And then what we do then, we increase the leads, our conversion rate. So currently, let's say 60%. 10 people called us, six buy, 4 don't. We increase that by another 5%. In small numbers, from 60 to 65. That's just 12 new customers per year. It's per year we're looking at right now. Let's stack that up a bit more. Let's increase the number of transactions. Now, again, this is a little bit trickier to understand, but it's essentially taking, if they only buy from you in a year once, what if they buy twice? Is there a service that they can return for? Is there a review that you can do in the year? Now, this is increasing it by 0.1 only. It's not even doubling. It's just increasing it by 0.1 transactions per client. And then what we do then is we increase, let's say, our average transaction value from, let's see, I'll just do it from here, $980 per transaction. Let's increase it to about 5%. So they go from $980 to about $1,000, $1,040, $1,030. Again, not crazy amounts there to increase. That's an extra thing of a ball. That's, $60-40. So all of this stacks up. If you've been paying attention to the numbers on the right here, you will see the impact on your cash flow and your profit so far, right? I'm not finished, by the way. The other thing that we can do is we can increase our gross profit margin. Now, this is the conversations we have with our suppliers. We're getting those discounts. Let's say we just increase it by 1%. So our margin gets better by 1%. It's not huge, it's just 1%. And that's that small discount we're talking about. Oh, what if we get discounts for buying in bulk and things like that? If your price decreases by 1%, this tells you that it's actually worth doing so. And it's just a series of conversations you need to have. Now, let's not make it all, unrealistic, like nothing's going to increase or make, let's acknowledge that there's an increase of costs in your operating expenses, whether it's your accounting fees, your bookkeepers, your rent, whatever that looks like per year. I'm being conservative. We can even increase it even more if we want to here, but let's say it's 5,000. What that looks like overall, your impact summary here, that's through our cash flow improvement. Before we talked about debtors, creditors, and stock and WIP management. You can see increasing sales, gross margin, and reducing the overheads. The cash flow impact overall is 100 grand more in your pocket at the end of the year than if it was the prior year. In terms of profit, it's 98 grand more in profit. Now, looking at that 100 grand, what that means is you can either invest that into the business and again, spin that wheel one more time, or you can look at drawing a little bit more for your family. Now, if you do need to draw a little bit more because of increased budgetary pressures personally, this is where that source can come from. But this is the levers that we can see that we can pull here and there, and they're not necessarily, you have to do all of them at once. You could find the one that you have the biggest finger on the pulse on, that you have the biggest handle on that you can pull. If that can increase by 10%, why not? And we haven't even looked at the our sales figure yet, but that could be in your gross profit margin. Now, if you haven't increased your price, this is where it can also create a massive impact. A 5% to 10% increase, at minimum, it should be what the inflation rate is right now. I think it's sitting at about 4 to 5%, if I'm not mistaken. So those are some changes that if you haven't proactively gone through and done it, this is the time to take some notes and think about some of these levers that you have. If you have some cash conversion issues, this is some of the strategies that you want to take through and try to work through as well. So overall, that's our impact on profit. Cash flow, that's profit. And this is if it's on a multiple of, let's say, 3.5, that's the value impact of your business as well. So overall, your business value goes up as well through those series of small conversations. Pretty powerful. While I change my slides, any questions, any thumbs up? Was that helpful? I'd love a little bit of feedback if anyone has any, because I'm about to finish up the last bit before any Q&A as well. Just change my slides. Feel free to drop any of that here. Okay. Everyone see that? People can't see and can't see. Can everyone see that slide right now? Good. Awesome. Thank you. Cool. All right, well, let's keep moving, and then we can get to the Q&A as well at the end. Now, how can those strategies improve your cash flow? We just saw that. The thing that we need to measure at the end is whether it's working or not. Yes, we can set up all those strategies, but different businesses will have different KPIs. For example, a motel should monitor room occupancy, a cinema should monitor average ticket sale, concrete supplier should monitor cubic meters sold. So we recommend understanding what is those key performance indicators. Now, the numbers that we saw before, those are your levers. They're not necessarily the thing that you need to do to get that result. The thing that you need to do, if it's lead conversion, is it the phone calls? Are you tracking those numbers? Do you have a dashboard that tracks your sales numbers from leads to conversion? How many appointments are you having? How many people are knocking on the door? How many inquiries are you getting? Those are the numbers that you need to be tracking. So for cost, for instance, that's budgets. You need to be reviewing monthly at the minimum. Are you hitting your budget targets for your overhead expenses? Or are you overspending as well? So setting up the strategy is one step. Monitoring and making sure you have those KPIs is crucial. And then you reassess each month. You make sure that consider some correction action that you might take. Okay, we overspent last month. We need to be tighter on our spendings next month. And essentially make sure that they align with your goals. So if that goal is yourself, you have to create a bit more profit for your family, then yeah, you can align all of them to make sure that it spits out. You can budget all of that to make sure that it spits out a certain amount that you want to achieve by the end of the year. If it's about exiting your business or selling your business, valuing that business, you can see how that impacts that as well. If it's about opening a new branch or buying a new investment property with deposit that you need, that impact summary that we saw before, all of that can be linked towards for either personal or business goals overall as well. Cool. So next steps. So set some time to work on your business. Now that you know some strategies you need to implement in your business to achieve the cash flow and profit improvement, it's essential that you set some time aside. It's not about getting all of it done at once. It's just having some proactive time to think about which are those levers that I can pull, which are some of the steps that I can take to, again, small changes makes a big difference. Block a time, whether the fresher it is, the better. So this week, review your notes, ask questions to your team if you don't have all the answers, or go do some research if you don't have those numbers. And consider which sales and cash flow drivers are key to the success of your own business, and put systems in place to measure and monitor those KPIs. Now, determine what if scenarios as well. You should analyze so you can prepare and safeguard your business. We just did an improve. We can actually use that calculator to do the other way. What if things went downhill as well? How does that impact us? So you can play with some of those levers as well. Set sales and cash flow goals. So sales, cash flow goals, and review your progress regularly through budgets and monitoring that every month. And that's more the accounting side, profit and loss and balance sheet. You need to make sure that's up to date for you to do that. Cool. How can we help? Well, this is the part where if you feel like it was helpful, you think like, okay, well, I know the concept makes sense, but I just don't know where to start. This webinar is to pique that interest for you. If you want to have a conversation with us, we can book in a call. We can look through and actually use that calculator in your business itself and take you through what we call a cash flow and profit improvement meeting, and help you actually identify what are some of those levers. Will help pick your brain and unpick some of those ideas together to then have an action step for you to take forward after that meeting. Some additional help, you might know how to do all that stuff. Some of the stuff you're not too good at. So you might need some cash flow forecast help. I already have all the other metrics already sorted. I just don't have a 12-month cash flow forecast or even just a cash flow management coaching session as well. But if you want to do that, here's a link. Tay is going to post the link as well. All you need to do is book an initial chat. You don't have to think about too much. Give us a ring. We'll talk you through and see where those challenges are itself. But yeah, that's our time with 1 minute to spare. I think I'm pretty impressed with myself with that. Let's open that up for some Q&A, any feedback, anything that you noticed. Remember that this is a webinar, yes, but whatever you might notice that other participants who might not be here, they might be watching. I'm not sure if this recording is going up, but if they are, try to share that, ask those questions, and we can build almost like a mini community right now to answer some questions for you guys. So I'll leave that open for everyone right now. If there's any questions coming through.
No questions yet, but thanks for sharing, Riz.
That's all good. I feel like I didn't stop talking that whole time. I was in the drink of water now.
You didn't.
No, I didn't. That's right. Maybe I took a breath as well. But I was trying to squeeze as much as possible, into this session so that people can have some key takeaways there. But yeah, if you guys have any questions at all, I really enjoy using that calculator. I've used that for our own business. I've used that for many of our clients that don't really quite understand where are those levers that they can find. But if you have some ideas that you want to share as well, feel free to add in the chat. If anything that I might not have considered as well, happy to take on that feedback as well. Thanks, Michael. Appreciate you joining us. And thanks, everyone, for those of you who joined us today. It is a Wednesday afternoon lunch webinar. I'm sure everyone's getting hungry now. So if you do need to drop off, we're sharp on 1, feel free to do so as well. You have some of this sweet, sweet music that you were playing before, Benny?
Absolutely.
Man, DJ Benny. And Kira, I want to thank you as well for taking us, allowing us to do this for the SPASA team and the SPASA members as well. It's always a pleasure for us to be here. So thank you for organizing that. And also the wider team, Rose, Tay, everyone. Like you said, Kira, at the start, it takes a lot to do a webinar. So thank you for your help, everybody.
Thank you, Riz, and thank you for the Inspire team for putting this together. That was a lot of information, but hopefully the members took some key points out of it. And if to the members, if you don't happen to get the link today, it's always available on the SPASA website as well. If you need to reach out to Inspire at any time, it's always there. And if not, can reach out to SPASA directly and we can point you in the right direction anyway.
Yeah, appreciate that.